I think there's a lot of consensus right now about what's happening, Eric. Seed stage is very hot. Valuations in some cases are extremely high. We can debate how high is too high, but it's the Series A spot I want to start. You have this belief that it's tough. Why is it tough?
Well, it's first of all, good morning, Ed. It's good to be here. It's kind of related to what you said, which is that the valuations are very high. So, valuations are 50%, 100% more than they were in the past couple of years. So that's the starting point for us, right? We're seed-first investors, and so companies can raise these rounds at these crazy valuations. But then, if they don't get into a high growth, fast go-to-market mode, they can't raise a Series A because the valuation that they started with was too high. So you can't, you can't have it both ways. Either you start in a more modest valuation, you grow into it for your Series A, or if you don't, then the Series A investors will pass on you.
Valuations are extremely high, as you wrote to me, in some cases completely nonsensical. So where does the power lay? Like who's allowing a valuation at the seed stage to Series A to get to that level? The founders that are raising, or those that drove and led the seed itself?
I think it's the investors themselves. The investors are trying to find those big winners, and there's also, particularly on the West Coast, there's some sort of a consensus building. Let's pick company A to be the winner in category B. And so everybody piles on, and it's whether the company has the right moat or doesn't have a right moat. And I would argue, if you're just a wrapper around the foundational models, you don't have much of a moat. But nevertheless, you've been anointed as the winner, and so you raise more and more money at higher and higher valuations. And then everybody else who is not anointed the winner is kind of left on the wayside.
Eric, you've been at this a long time, with respect. I wondered if you could reflect on how the sort of price discovery and vetting of a founder present day is different to when you started out in your career, or even just 5 years ago.
I would say that there's way more importance, at least coming from us, in the quality of the founders. Yes. Particularly at the early stage, often there is it's an idea, or there's a model, or there's a prototype, but it hasn't really been battle tested yet. And so the quality of the founder is really essential. And it's not just the quality of the person or these people in terms of thinking and their ability to execute, but it's also their personality and their resiliency. Building a business is really, really difficult. And how we're going to be married to them for a long, long time, and we want to make sure that they're the right people. So that really is our main focus. Now, obviously, we're interested in what they're doing in the domains. We avoid investing in foundation models, anything that has heavy computing layers, a lot of capex. That's really kind of for the big mega funds on the West Coast. We're looking for people who have domain expertise, who have a passionate idea, and most people obviously these days are going to be using AI to launch their product. And so we've done this now for 17 years. We're looking for that needle in the haystack, that exceptional founding team.
It's so interesting because if you think the phrase seed round I've written this year, what's the point? You can call it a coconut seed or a mango seed round. But the sort of interesting part is that a small group of largely researchers can raise such an incredibly large seed for compute. So if you're looking for the profile of startup that doesn't need the compute, are they able to command that debut check size? What would they need it for?
Well, no, look, everyone's going to use compute at some point or another. I'm looking for companies that don't have to be building the compute themselves.
I see.
But they'll be able to rent the compute. They'll be able to offer tokens, which are really a measurement of compute. But we're looking for people who have original ideas that are, not just, again, as I mentioned, wrappers around the LLMs, around the foundational models, and we're getting to see that second generation of AI companies, and we saw this in mobile. Right. We saw this, previously in previous technological cycles. The first cycle is typically kind of the low-hanging fruit. I'm going to automate this. I'm going to go into customer service. I'm going to go into law and these kinds of things. The second generation are people who invent products that could not be made possible without the technology of today, and the technology of today obviously is AI. Those are the people that we're looking for.
You're deploying your 9th seed fund, and what you told me was you're doing it with extreme discipline. So I wonder how often it's more about resisting the urge to participate in a round potentially, rather than go actively chasing rounds.
Yeah, look, that's where there's art coming into the science, right? So the science is, can I live with a high valuation? And what will become of the company if it starts at such a high valuation? The art is, do these people have taste? Do they have an idea that might not command a super high valuation today because it's brand new, it's novel, it hasn't been proven. And so again, you weave and you bob and you go this way, and our deal flow hasn't been at the highest level it's ever been. We literally are talking to thousands of companies. Our entire team talks to thousands of companies every year, and so we've become more and more selective as a result of that. And we use our experience, we use our kind of accumulated knowledge over the years to try to pick the best teams.